Okay, so we are about to finish our day, and we have the honor of having with us here to give us a closing address, the Vice Governor of the Bank of Portugal, Professor Clara Raposo. Thank you very much for being here. It's a great honor for us to have you here closing the conference. We have had many specialists during the day speaking about sustainable finance, and now we will have the pleasure of having some insights from the central banking perspective on this issue, namely, how does monetary policy goes green? I hope that we have the answer for that. A few words on Professor Clara Raposo. She's Vice Governor of the Bank of Portugal since December 2022. Previously, she was Dean of ISEG, Lisbon School of Economics and Management, Universidade de Lisboa, since 2018. And she was also full professor of finance since 2010. She was in charge over there of the scientific area of finance in the management department. She coordinated the master courses both in finance and management, and specifically the postgraduate degree in financial analysis and the sustainable finance, green and climate finance executive program.
Right, let's get started. And finished, because it's the last session of the day, so I'm sure. And I apologize for taking a bit long with my address, but I hope it's useful and interesting. So, first of all, thank you, Professor Álvaro Matias, Professora Isabel Cantista, for the invitation, also Professor Theodore Cojaiano, a friend as well, for the invitation to be here. I'm always happy to be back in academia, even if only for a short while today. And if you allow me the environmental jargon, this is like my natural habitat. So this is very much to my liking. And I should start by congratulating Universidade Lusíada, the organizers, the participants, everyone who's attending for this welcome initiative, which brings us all together to debate one of the most critical issues of our time, not only for the world of finance, but for the world itself, period. Or, as UN Secretary General António Guterres strongly stated on many occasions, sustainability is critical for the livelihood of billions. So, the overwhelming challenges posed by climate change will surely require a plurality of efforts to be properly tackled. As Governor Mário Centeno of Banco de Portugal put it some time ago, this is a subject that concerns politicians and policymakers, financial and non-financial firms, universities, NGOs, and last but not least, what we all are, citizens. Until a few years ago, when central banks talked of sustainability, it was mostly public finances and credit developments that were at stake, as in fiscal sustainability or debt sustainability. Nowadays, while those notions remain as up-to-date as ever, it is another concept that claims the spotlight. I mean, of course, ESG sustainability, that is, sustainability in terms of environmental, social, and governance factors. According to a McKinsey study, the number of internet browser searches for these three letters, ESG, increased fivefold just between 2019 and 2022. And one of the many signs that the concept is here to stay. Within the framework of ESG sustainability, a wide range of issues call out for our attention and our action, but none more so than climate change. Today, that will be the focus of what I have to say. Let's see if this works. So my outline is quite straightforward. I will start by briefly recalling a few fundamental points about climate change and sustainable finance. I will then move on to the reason why these issues are particularly relevant for us at central banks, and I will wrap up with a reference to what we have been doing in this regard at the Banco de Portugal. So, I can be brief on the basics of climate change. They are well known, especially among such an audience, and after a full day of shared insights. So the science is plain to see, a clear trend of rising average global temperature since the beginning of the industrial age, driven up by a piling up of greenhouse gases in the atmosphere. I can also be brief on the implications. It is true that the sheer complexity of climate change does not allow us to fully grasp the true pace and extent of its impact. But this impact is indeed becoming increasingly apparent in the higher frequency and magnitude of extreme climate events and the growing severity of chronic climate events. Wake-up calls about what the climate crisis means for our societies and economies have been coming for many years. The UN's Intergovernmental Panel on Climate Change, IPCC, is certainly the main reference, but several other reputable entities have also been providing important insights. Earlier this year, the UN's World Meteorological Organization estimated that 2023 had been the hottest year on record, with the average global temperature rising 1.4 degrees Celsius above pre-industrial levels. Which is to say, we are on the brink of breaching the 1.5 degrees Celsius overall limit that was set in the Paris Agreement. And only a few weeks ago, the European Environmental Agency updated and detailed what the impact for the European Union might be if we failed to fix current climate trends. The root of the problem is well known: the greatest market failure the world has ever seen, in the words of Nicholas Stern, or what economists like to call a colossal negative externality, a huge difference between the social cost of greenhouse gas emissions and their private cost as supported by the emitters. Tackling the climate crisis must necessarily combine an element of adaptation and one of mitigation. So, in the latter case, mitigation, 3 action points stand out, all of which essentially fall within the scope of government intervention. First, adjusting carbon prices, either through taxation, emission trading schemes, or regulation. And this does not necessarily have to mean a significant increase of the tax burden on societies. It could conceptually be largely accomplished through a rebalancing of tax systems. The International Monetary Fund estimates that the average cost of carbon emissions currently stands at about $5 per ton, and it would need to reach $85 per ton by 2030 to keep the 1.5 degrees Celsius alive, as the IMF managing director put it last year at COP28. Second, enhancing green research and development, which will require the involvement of academia and private firms, but also public incentives in those fields, where the private sector would not be sufficiently forthcoming. And third, mobilizing the huge amounts of capital that are needed to finance the energy transition worldwide, which is not unrelated to my previous point on green R&D progress. So, how much will be needed? Well, several of the most credible international financial institutions, such as the IMF and the International Energy Association, have looked into the matter and came out with a range of estimates that are not far from $1 trillion per year until 2050 if climate goals are to be achieved. And I am merely talking of incremental investment, the one that goes beyond what will always be necessary to ensure that the existing stock of capital is regularly replaced in line with its life cycle. If we take into account this normal replacement requirement, total investment may reach around 10 times that figure over the next decades. And this total investment will tend to follow the same rationale of alignment with the energy transition as incremental investment, thus compounding the effect of climate change. We cannot credibly expect that investment needs of this magnitude will be fulfilled within already tight public budgets, which is to say that the only way forward to dealing effectively with climate change is to succeed in mobilizing the vast pools of private capital that are required. Naturally, this also requires success in mobilizing the unique expertise available in the mainstream financial system to intermediate and allocate capital. So, there are some signs that the financial system is rising to the task as regards both climate finance in a narrow sense and sustainable finance more broadly speaking. IMF figures, for instance, point to an upward trend over the past few years in the value of assets under management of sustainable investment funds, notwithstanding market fluctuations and the impact of the COVID pandemic, but the upward trend is there. Nevertheless, there is still a long way to go, as can be seen by the fact that such assets amount to just 6.2% of total financial assets under management in late 2023. Now, one of the main obstacles curtailing the expansion of sustainable investment is a lack of sufficiently reliable, comparable, and granular data. Market participants naturally need high-quality data to properly assess and manage risks embedded in such investments, whether they refer to climate projects, environmental projects, and more generally ESG projects. That is critical to enhance credibility and avoid the well-known curse of greenwashing. We need to understand which numbers we are collecting and what we are dealing with. Significant efforts have been put forward by several international institutions to improve the outlook for ESG data and, more broadly, the regulatory framework conducive to more and better sustainable finance. Among such stakeholders, one should acknowledge the important contributions made by the International Monetary Fund, the G20, in which Portugal participates this year as a guest country, and the Network for Greening the Financial System, NGFS, which is a global club of central banks and other financial supervisors, which the Banco de Portugal joined almost from its start in 2018. And of course, due credit must also be given to European institutions like the European Central Bank, the European Banking Authority, and the European Union itself. The EU agenda for sustainable finance, in particular, has been at the forefront of regulatory efforts worldwide since the EU's Action Plan for Sustainable Finance was launched in May 2018. This agenda has already resulted in significant steps regarding such cornerstones as sustainable taxonomies, disclosures, benchmarks, ratings, and labels, so that we are able to understand what we are talking about and start measuring things and making changes. It's an ongoing process that will entail a sizable effort of adaptation, but from which we can expect a more transparent, credible, and robust framework to mainstream sustainability in the financial system. Now, as I said before, the most effective instruments to tackle climate change can be found in the toolboxes of governments, which are also the ones with proper legitimacy to define and implement climate policies. They're the ones who are elected. Governments may therefore be regarded as the key climate policy makers, and other institutions such as central banks will essentially be climate policy takers, to quote Frank Elderson, member of the ECB's executive board and vice chair of the supervisory board. And yet, like all members of society, central banks do indeed have a role to play in addressing the climate crisis, a role that must certainly comply with their mandates, but may also be seen as deriving from those mandates, as even as being instrumental in carrying them out. So, what should central banks do, and what can they do? First and foremost, central banks will be providing their best contribution to address climate change simply, and simply in commas, by being successful in performing their core missions, which are, of course, core missions of central banks, preserving price stability and upholding the stability of the financial system. Now, the basic rationale for this statement I just made is also quite easy to grasp. Without price stability or financial stability in an economy, it will be much more difficult to finance and thus to successfully promote an orderly transition from a high-carbon economy to a low-carbon economy. Excessive inflation distorts relative prices, increases uncertainty, and curtails an efficient allocation of resources. This would quite possibly compromise a suitable redirection of investment flows to sustainable projects. And naturally, only a sound financial system with institutions duly resilient to financial risks, well capitalized and well managed, will be fully able to assist in providing the huge amounts of sustainable investment that are sorely needed to finance the energy transition. But the fact is that central banks need to go beyond simply accomplishing their core goals. And that is because of what we might call a special case of double materiality. Like any other entity, central banks have a material impact on climate change, but climate change also has a specific material impact on the central bank's core missions. First, monetary policy, which is how central banks promote price stability. Climate change impacts monetary policy in two main ways. It affects the macroeconomic variables that shape the conceptual framework of monetary policy, such as inflation, output, credit demand, or the equilibrium real interest rate. And it affects the risk and valuation of financial assets used for monetary policy operations. And second, Climate risks affect the stability of banks and of the entire financial system, which central banks are tasked with preserving. Such risks are nowadays, look at that, it's only getting worse. This is the worst of them all, of all my slides. Such risks are nowadays classified in two main categories: physical risks and transition risks. Physical risks are directly associated with natural phenomena. They can be deemed acute in the case of more frequent and intense natural disasters, such as heat waves, storms, wildfires, floods, and so on. Or they can be termed chronic if referring to long-term effects progressively induced by climate change, such as rising sea levels, changes in rainfall patterns, or ocean acidification. On top of direct human distress that they cause, these risks lead to losses in property, putting a toll on the financial system through several different channels. And then we have transition risks that stem from the process of adjustment to a low-carbon society, unleashing effects that will impact the value of assets in various ways. It may be the result of public policy changes, such as the implementation of carbon taxes or regulatory curbs of greenhouse gas emissions. Or it may derive from technological progress, shifts in consumer preferences, and potential litigation, among others. Assets affected by transition risks are usually considered to be what we call stranded assets, to reflect the fact that they would no longer be available, or at least not fully available, for their traditional uses with their traditional benefits if this transition takes place. Now, climate risks of both kinds, physical and transition risks, are not considered financial risks on their own. They are rather seen as drivers of the traditional financial risk categories, namely credit, market, liquidity, and operational risk. The single supervisory mechanism in Europe is responsible for banking supervision in the euro area, bringing together the European Central Bank and all the national central banks of the system. And it identified climate and environmental risks as one of its main priorities for the period 2022-2024. Even before that, climate and environmental risks were already on the map of the main risks to be watched with particular care. Beyond those core missions of price stability and financial system stability, central banks also provide contributions to tackle climate change in several other fields of their activities. Depending on each institution's specific mandate, these may range from promoting research on economic and financial impacts to compiling relevant statistics or counseling governments on climate policies, among others. And further including the decarbonization of central banks' own activities, from currency issuance to the oversight of payment systems, the management of our own monetary policy portfolios, or several others. We are a company like any other organization that you would know. So this is the broad background against which the Banco de Portugal has defined its own approach to sustainability. Although the bank had long been applying policies in areas related to S, social responsibility, and to G, good governance measures in areas, in examples such as diversity promotion, ESG issues overall really started gaining a much larger significance in our activities about 5 to 6 years ago. I wasn't at the bank then. That's when the Bank of Portugal joined the Network for Greening the Financial System, subscribed the Letter of Commitment to Sustainable Finance in Portugal, and began taking several other steps that resulted in the adoption of an integrated approach to sustainability with a special focus on environmental issues and, above all, on climate change. The current version of our approach is a strategic roadmap that goes by the name of Acting for Sustainability, and is closely intertwined with the overall strategic plan of the bank for 2021-2025. And it states our commitment to sustainability and where we stood in early 2022 when the roadmap was published on our official website. Most importantly, it contains a wide set of initiatives involving most of the bank's areas of activity. Currently, we are a little more than midway through the time horizon of the plan, and the roadmap unfolds into three main areas. The first one has a double focus, both on the bank's missions, our core responsibilities, and on climate change, the most challenging of the ESG issues for us. The second area for action broadens the scope to the entire ESG landscape while turning to the internal dimension of our activities, ourselves as an organization, how ESG compliant are we? And the third and final area covers different sorts of outreach activities connecting us with both internal and external stakeholders. Going a bit further into the details of initiatives implemented under each of those three dimensions, I start with Area 1, which deals with the Banco de Portugal's missions. As concerns the goal of preserving price stability, that is fighting inflation, for example, or keeping it under control to reach the target of around 2%, our activities take place essentially within the Euro system, where we share responsibilities with the ECB and other national central banks. We have been taking part in the decisions that are leading to an incorporation of climate considerations into the euro area monetary policy. Under the new monetary policy strategy, published almost 3 years ago, and the more recent Action Plan for Climate Change, such considerations started to be embedded into the conceptual framework of monetary policy and also into the way monetary policy is implemented as regards the design of asset purchase programs, collateral eligibility from the banks, or reporting requirements from the financial institutions. As for the preservation of stability in the financial system, our key priorities are twofold. On the one hand, we seek to assess the exposure of banks to climate risk and the financial system's resilience to such risks. And on the other hand, we are adapting our supervisory approach so that banks are encouraged to incorporate climate and environmental risks into relevant areas of their activities. And if banks do so, all their clients will also need to follow. That's the strategy overall in the European Union. One of the main milestones in this process was the publication, that's number one, in July 2023, of our first annual report on the banking sector's exposure to climate risk, which is an obligation set on Banco de Portugal by the Climate Framework Law of December 2021. This is something that we do in Portugal that other countries don't have as an obligation, but that we published our first report in July last year. This report brings together the macroprudential and microprudential viewpoints and will be updated every year with new elements. These are analytical pathways that are rarely seen and potentially quite enriching for us to understand how is our country overall influenced by all these different dimensions of climate change, how can we measure them, how can we make progress. Another milestone, still regarding financial stability, was the issuance of the supervisory expectations that are addressed to those smaller institutions, financial institutions in our country that are not jointly supervised with the European Central Bank. So the large ones are supervised directly by the European Central Bank together with the national banks. Yeah? And the smaller institutions are supervised exclusively by the National Central Bank, in this case, the Bank of Portugal. So the expectations that we have established focus on business strategies, internal governance models, risk management procedures, and the disclosure mechanism. Their incorporation by the industry, the banking industry, is being regularly assessed. And to wrap up Area 1, I must still mention that climate change has also been part of our research agenda. So this has yielded about a dozen papers, articles, and several technical notes in the past few years that develops knowledge in these matters that we definitely need in order to make progress. Likewise, we provided many technical inputs to inform the government and other authorities to inform their positions on the main files of the European Union's agenda for sustainable finance. Yeah, our advising role has been extremely important over the last few years. Moving on to Area 2, which deals with internal management at the central bank, the main highlight that I can show you is the recent publication of our own transition plan, let's say, the Banco de Portugal's decarbonization program. This is a commitment to reach carbon neutrality by 2050 with intermediate targets for each decade, and those targets which are even more demanding than the ones set by the Portuguese government to the country as a whole. Starting with an assessment of the bank's carbon footprint, the document sets targets for emissions from its buildings, from our vehicle fleet, and from the electricity that we consume. It further comprises a detailed action plan with several quantified and time-bound measures to be implemented so that we reach net zero. The decarbonization program is also built upon previous cornerstones. Among them are two contributions that enlarge the scope of the bank's carbon footprint assessment. One was the first report on the climate-related financial disclosures of the Banco de Portugal's own financial assets, which we published a little over a year ago. This means that the central bank, we have our balance sheet, we have the assets in which we invest, and we also assess the carbon footprint of the assets in which we are making our financial investments. Okay? The other element is a set of initiatives aimed at estimating and curtailing also the ecological footprint associated with the printing and the issuance of the euro banknotes. Our banknotes, are using high quality cotton, etc., 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 so that the production is compliant with the best practice. Among several other measures taken still in this context of internal management, I'm also happy to say that, so that we are not only talking about the environment but look at other aspects as well, I brought just one example, that people with specific needs are now better able to enjoy the Museum of Money that we operate at our headquarters, and you are all invited to visit for a truly interesting experience that I vividly recommend, which is open and free to the public. That's also part of responsible attitudes to society. Now, many more initiatives could be mentioned within this Area 3, which aims to promote ESG awareness among our stakeholders. It's not just with banks by setting the standards for supervision to make sure that the banks comply with them. We want banks to report good quality data, to make sure that when they are dealing with the companies to which they are lending money, they require that those companies also report ESG data to them, etc., etc. It's a learning process for us all, okay? But it's not just banks, it's everyone we deal with. So the keynote address today is an example of this, right? We are talking to whoever wants to hear us about these topics, trying to make sure that people understand how relevant our action is. So, and also regularly exchanging views on climate and environmental issues with the banking system, besides setting the supervisory targets, is also something that we do quite frequently with workshops, with dialogue, trying to make sure that the whole industry is able to find the right way of reporting information that we need to follow. So, and of course, inside the bank, with our own staff, we have we have truly a bottom-up perspective in the way in which we engage with our workers at the Bank of Portugal. And a lot of the initiatives that we see, quite a few of them, are definitely promoted by, organically by the people who have the ideas, who want to suggest discussion of different topics, etc. So it's something that we do in all possible areas of the bank. And now let me turn to my final takeaway. We're concluding, the milestones. This is, there we go. Last week, we celebrated in Portugal that initial whole and clean day of April, in the words of our great poet, Sophia, on which our democracy stands. And the time is therefore prone for celebrations and to the assessment of the legacies. That comes to mind as I consider the patchwork of milestones summarizing what we have been doing to tackle climate change over the past few years. In a very modest way, I am hopeful that as future generations look back at that patchwork that we are building, their assessment might not be too harsh on us. We are making an effort. So, the first steps for a future with future. Thank you.
Clara, thank you so much for the wonderful presentation, and I invite people in the room to ask Clara deep questions about the mandate, also bearing in mind that she's also a professor of finance. I do have quite a few questions, but I will open it first to people in the room for any remarks. Maybe I can get us started a bit. What I found really interesting was your remark about being a policy taker, right? And then the expectations that were put on central banks to somehow be policymakers in some instances, and we see it we see the ECB changing its stance, right? On early 2020, there was no climate consideration in the asset purchasing program, for example. and now that narrative is completely changed, right? And so the question is, do you see a potential change in that direction, in that it could be potentially governments mandating or extending some of that policy making or mandate in the area of climate when it comes to the bank, or is it is there a potential to expand that, or is it quite set stone in a very difficult environment to navigate?
Okay. Not a very easy question,
No.
Theodore.
Yeah.
We used to be friends, and we
Yes,
still are.
yeah.
Okay. So, but I think everyone understood and I think I understood well what you're asking, right? So, because I did say that the people who decide what's important, right, aren't for society as a whole, for the whole economy. It's not central banks. Our essential mission is, to make sure to guarantee price stability. For the European Central Bank, this is really what's the objective of the central bank. In the case of the National Central Bank of Portugal, for example, we have the double mandate of price stability and the financial stability overall for the whole system. But of course, we cannot ignore what's happening around us. And so we don't have climate change or even the welfare of the economy clearly written, of people in our society clearly written in our mission, right? So what are we doing? And that mandate hasn't changed for central banks. And to be honest, I truly believe that it must be the people somehow who decide based on scientific knowledge that tells us we are going through huge stress. We really need to change the way in which we produce and consume and finance things to make sure that the planet goes on with conditions for humans to live in it, right? So the way central banks have been dealing with this is by trying to frame climate concerns within our missions, within our mandate. So what we see is that climate change is so important for the economy as a whole, involves so many risks that we treat it as another very important new risk that we weren't dealing with before. So in the same way that we need to assess risks and control risks, etc., for the economy, traditional credit risks and market risk, etc., now we say that climate risk is another factor that's influencing the way in which the whole economy behaves and in which financial instability might arise, and we might be in true problem because it affects the economy in many possible ways. So actually, we are exceeding somehow the original mandate, but by interpreting it in a broader sense than we used to, in a way. Within Europe and the European Union strategy to fight climate change, in a way, right, and with all the different legislation, etc., the mandate of the European Central Bank, for example, was not changed. But the requirement that banks must report a lot of information and that the large firms must report a lot of information to banks. And then smaller firms it's not mandatory for small firms to report environmentally related information. But the banks must report information on the firms that they have to which they are sending loans. I mean, in a way, the European Union put us at the center of stage. They say, look, you are the ones who are supervising the banks, and the banks are the ones who must be controlling, who are giving credit to the economy, and so they must, tell you how green they are, and you must assess if they're telling you the truth. And so we were put at the center of action in many ways. So in Europe, perhaps because the highest percentage of the financing of the firms in Europe is bank-based, the banks are being treated as, one way or the other, you'll be the ones conditioning how you finance the economy, so please make sure that you do it using also ESG criteria. And the main difficulty, and honestly, I think there is very good will in Europe to do it, but it's difficult to measure these things. We don't have very good accounting yet to know exactly. I mean, we know how to deal with whether we sell, we buy, etc. Euros is the unit we are used to measuring. Now, CO2 emissions, etc., greenhouse gas emissions, and so on, that's a different language that we're not used to speaking. So I would say that that's even, besides the need to change the way in which, you know, the different energy sources, etc., etc., there's also a practical difficulty in knowing exactly what we are measuring, what's the data that we want, and then we tell the companies, you must disclose your carbon footprint, and they tell us, how do I do that? Yeah, I mean, the Bank of Portugal ourselves, when we published this year the decarbonization program that I told you about, and that we are measuring our carbon footprint, etc., I mean, we're doing this for the simplest version, for scope 1 and scope 2, but still struggling with estimating the scope 3 emissions, etc., within our whole supply chain of activities, right? So it's a big transformation, and we're doing it ourselves so that we understand what are the difficulties that the firms are facing and that the banks are facing, etc. And at some point we'll get this right. We'll learn. We'll know how to do it. But for a while, I'm pretty sure also that we will all be making lots of mistakes here and there, yeah, trying to measure what we don't know. But it should be a learning process. And I don't even know if mandates need to be changed or should be changed. Even without that, we've been taking it into account, even in the way in which we invest in our portfolios, right? Which is like one of the areas that I cover in the Bank of Portugal, the markets, the portfolio.
It was such a great and nuanced answer, and I appreciate you tackling it. And I know it was a difficult question to engage in, but it was particularly prompted by that expectation that, given what ECB has done with the climate tilting, to ask whether independent central banks might replicate that, and it's a really difficult thing to do. But I also appreciate what you said about technically democratic processes and the way we deal with governments, sorting out the main piece of the puzzle, and we still need that.
Yeah.
And I think that the Commission, for example, in what's happening in the area of tools, we had a panel this morning discussing with the GRC, with the EU Platform on Sustainable Finance, that we are creating better tools.
Yeah.
And this is what I hear you're also saying, you know, we are creating better tools to assess where the economy is going, but then the policy mandate has to be set. Okay, once we know where this is going, how do you change the economy? And that's a different mandate altogether.
It is.
This is what I hear.
And you heard very well, and I agree. That's the situation. The other thing, you know, that's not so nice to discuss, and that's but that we must, you know, address openly, is that the current geopolitical situation, and I'm sure this has been during the day you've discussed it, is really making it hard to make progress, right? Because there's parts of the world in which we are comfortable with assessing the cost of a transition, etc., and going ahead with it, and there's a lot of even political will at the moment. But the current situation is not very easy, because there are countries and economies that see themselves, at least in the short run, etc., as losers in a situation where there is a transition from fossil fuels to different sources of energy. And energy means power, right? Means value for your economy, etc. And if you look at it short run, there will be those economies that, you know, they have the fossil fuels, they have been producing and selling and basing their economies on all that. And suddenly they are told that you need to change completely. There's a lot of investment. You will lose your prominence in the market, and you'll become a sucker, you know, just like everybody else. And that's very difficult to do. So economic diplomacy, etc., and finding a way of, if it's multilateral, etc., finding a way, and that's very important for sustainable finance, for the discussion of sustainable finance. How can we make sure that the losers aren't losers in the overall process? How can we share the costs of the transition for such a global process that we need to change? That really requires, it can't just be the Bank of Portugal making its changes, or even the Portuguese economy making the changes, or even the whole European Union making big changes. It's insufficient. It must be the whole world making these changes. The US must make sure it goes ahead with it. China must be making progress in all this, etc. And we must find ways of compensating somehow the losers, so that whose response, I mean, of course there's a lot of responsibility for greenhouse emissions for the countries who produce that energy. But we have also been consumers of all that for many years, right? So it's something that needs to be very well discussed so that everyone understands it's time to take more action.
I think there's many lessons that I think could be learned also from Portugal. We had earlier this morning some figures on capex and on
Sure.
green economic activities, and Portugal is looking great, given that it is one of the, Portugal, Spain, Germany being some of the manufacturing hotspots for clean,
True.
for green industries, right?
Yeah.
And so that is that
We're,
is
we're actually a good example, I would say. We should be a good example to show to those more reluctant countries in going through transition, right? Because I'm sufficiently old to remember those days when when we had the initial investments in renewable energy in Portugal, and at the time how controversial that was, because it would be huge investments, too expensive, we would be paying this forever, and of course we have paid the cost of that and lots of problems, perhaps even in public finance, etc., in many ways. But in the end, a few years later, we have the cheapest economy, the cheapest electricity in Europe, and it's the greenest. And sometimes when you do something that's right, that makes sense, that's right, not just at the pure, simple financial numbers at the moment, but that looks at a longer run horizon, pays in the future. So I think we are benefiting from that first mover advantage at that stage, and we'll see how this goes to the others as well.
It's a great example of that. I have a much easier question, but I see Carlos having a question there. Please.
Question is regarding governments. So you said, and rightfully so, that governments do need to act and have the power to do so, and it stems from a democratic movement. But how do we deal with sovereign bonds? And my question goes more into that direction. So sovereign bonds are used for non-conventional monetary policy. At the same time, they are excluded from the green asset ratio, for instance. They serve purpose of financing the economy. So how do we deal with this, in a way, exclusion or putting aside the topic of sovereign bonds? And by the way, how does Bank of Portugal deals with their internal portfolios, which I'm sure has a lot of sovereign bonds as well?
Okay, that's very good and interesting and different question. Very specific, but I think very interesting as well. Actually, in what concerns the Bank of Portugal's portfolio and own portfolio and the investment, etc., so we follow very closely the Eurosystem rules overall. So what the ECB, the European Central Bank, decides for the whole system, we share those rules, and we follow the same principles overall. So, and for the asset purchase programs, the trend, which actually are being slowly reduced currently by the ECB, with the more restrictive monetary policy at the moment. The balance sheets of the central banks are being reduced instead of growing, because they grew immensely over the last decade or so. So over the last few years, yes, like I mentioned, there was this, and even in our monetary policy stance, we have that statement that says, and when possible, we do a tilting, a little twist in our investment policy, tilting towards greener investments. So whenever we have the opportunity of choosing to complete our portfolios, etc., there's extra benefit. The instruction is, when you can invest green, okay? So there is a bit of that, but the truth is that the portfolios at the moment are actually shrinking instead of increasing, right? So what we are purchasing these days is less than what we were purchasing over the last few years. It's still a lot more than in the conventional monetary policy of 15 years ago. But still, it's not something that's going to increase immensely. Still, on sovereign bonds, and why aren't they considered green, or how do you account for them? Actually, it's a discussion. It's a current discussion at the central banks. For example, the Bank of England, in their decarbonization program, they are considering sovereign bonds as green, okay, as ESG compliant, in the sense that if the whole country has a strategy, if there's a strategy for a transition of the whole economy, and if there is political commitment to do that, when you invest in public debt, you are you are financing this transformation, because the state has presented a strategy to decarbonize the economy, and there's a transition plan, etc., for that. Whereas in the EU, we haven't seen that exactly. Some countries are issuing some sovereign bonds, specifically in this green market, in this ESG market, okay? And those bonds specifically, when those states, when those governments are able to prove somehow that all the money that they are raising with that bond issuance is being applied in very specific projects that really comply with the green transition, right? In the case of smaller countries, for example, like Portugal, sometimes it's not so easy to do so. For the size of the bond issuance, it's not so easy to allocate it specifically to the projects that are all green, etc. So, and even if it, and so it hasn't been so easy to do it. So, but it's something that IGCP, the national agency that's issuing bonds together with the Ministry of Finance, in my view, should definitely consider, because I see public corporations, public companies in Portugal being able, and with a portfolio of real projects that could be, I think, could be considered as green projects, and they should be able to issue green bonds somehow. So not just in the private sector like we sometimes see, yeah, but I think some of our companies, even public sector companies, could be able to issue green bonds, but that's something that perhaps they can't do on their own without the proper agreement from the whole Ministry of Finance and the national agency, so that it's coordinated and we move towards that. It's possible, but it's an interesting discussion and a relevant one, because especially in a banking system like Portugal, where our banks have also been reducing the share of sovereign debt in their portfolios, in their balance sheet, the share of Portuguese sovereign debt in their portfolios. It's more geographically diversified these days, but it's European anyway. So that issue is still there. That problem, let's say, is still there in terms of not investing in Greenland. But if these states are really making changes and transitioning to greener financing, greener buildings, greener everything, perhaps sovereign is the best we can find in terms of green financial assets, in terms of investment, but not yet considered so. Yeah. It's a very good point.